Hi friends, hope you're doing well. Today I want to talk to you about one of my favorite investment assets, which is the S&P 500. I just love investing in it. It's set it and forget it, really easy. Now, obviously, most of you will know that the S&P 500 stands for the 500 biggest companies in America. Question though is, who actually comes up with those? And also, do those companies inside of the list actually change? So in this video, I actually want to go through that and also actually look in detail which companies joined the S&P 500 this year for the first time and which companies actually had to leave the S&P 500 because it's not set in stone. It's very dynamic actually. Right, so here we basically have the S&P 500, the 500 biggest companies in the US. And obviously at the top, you see some very familiar names. Once again, Apple is now back on the top spot, which surprises me given all the negative press around the latest iPhone models and so forth. But somehow they kept the valuations high. So overtook once again to be number one. But that's very dynamic at the top. Nvidia currently second, then Microsoft. And then obviously, at the top 10, we see those big heavy hitters over here. You can see already the weighting. So we'll come back to this in a moment. But basically, the more valuable a company is, the higher the weighting will be in the stock market. It means if I go down to the 503rd company, sometimes they have a couple of more companies, but usually it's around 500. That only has a weighting of 0.01%. So you can imagine, even if they tripled in value, then it wouldn't really make a big difference overall to the S&P. While it's those at the top, you see the total average of those, the weighting it has at the top, they really make a difference to the overall returns of the S&P 500. So while we diversify, we're still very much concentrated at the top over here. But the beauty of it is that the top is dynamic. I made some videos in the past where I showed, the top 10 companies, 20, 30 years ago in the S&P 500 used to be very much different. Now it's pretty much all IT, software, what have you. Back then it was oil companies, energy companies, consumer staples like Coca-Cola and so forth. So it really is dynamic. It changes over time. And that's the beauty of it, right? New companies come in that do well, and old companies that don't perform so well anymore, well, they're actually being pushed out. And that's why long-term, you as an investor into the S&P 500, you in a way bet on the winning horse, right? Whoever's doing well, you're going to be benefiting from it. Now, the whole US economy has to collapse in order for you to not do so well anymore investing in that. But overall, having such a mechanism, it's really a self-improving process over time. Only the good apples, so to say, stay in there. The bad ones are being pushed out. And for me, I really enjoy it. And all the while, it's being done for you passively. I pay 0.03% management fee on my ETF of choice, which is the SPY5. But there are many other great S&P 500 ETFs out there. But yeah, overall, that's what we're looking at. Right, with this, let's jump in and have a look at which companies have been added so far into the S&P 500, meaning new additions. Obviously, we'll come to the ones that had to leave, because obviously, if you have 500 companies, there can only be ever 500. So for every new company joining, one also has to leave previously. You can see here in reverse order the new companies. And at the top over here, the most recent addition is actually Palantir, which if you're in the investing space, you probably heard about. A real interesting company, to say the least. Also a bit controversial, I would say, in many ways, but definitely has very strong potential. And obviously, previously, before being in the S&P 500, a lot of people were already, treating it like another Tesla and so forth. So there was so much trading volume behind it. And well, now they have proven themselves. And I'll come to this, obviously, when we speak about what made them qualify to get into it. But obviously, yeah, that's probably one of the most exciting additions to be added to the S&P 500. We jump over to Seeking Alpha. We can see really the stock performance of Palantir for last year up 144%. I mean, really impressive. I used to actually own Palantir back in the days. I think it was a long while ago when it was at around $8, $9. I was holding it over here, but unfortunately, I sold out of it. It wasn't a big position, and I'm not sad about it because I'm not here to pick individual shares. I'm sure they will continue to do well, but it's not a company I would personally invest a big position in myself. Interesting thing is also, once a company gets added to the S&P 500, that makes even more interest and volume naturally into the share price as well. So you can see here, when it was added back in September, around over here, boom, it gave an immediate boost to the stock price afterwards, right? Because, those good news attract even more investor. Now it's seen as an even more solid company and also more money being put into it, right? Because imagine all those ETF investors around the world who invest in the S&P 500, they now passively will start investing into Palantir also, because now technically I also own some shares in Palantir through my S&P 500 holding. So that's the beauty of it. And that's why you will see those companies who recently added to the S&P 500 will usually have an appreciation in share price. On the same day, there was another two companies. One is Erie Indemnity. I'm not too familiar with that one, but another one was Dell Technologies. who makes computers and so forth. And frankly speaking, I actually thought they were already in the S&P 500. I wasn't actually aware that they haven't been featured. It's such a legacy company almost, so I was surprised to see them added only now. But yeah, you can see why. The stock price has been doing extremely well, up 82% for the year, and year to date up almost 60%, almost twice what the S&P has been doing. So really nice performance. Their stock increase hasn't been significant after they've been listed, but still, obviously, it helped a bit over there. So yeah, really interesting to see how they will develop and grow from that inclusion in the S&P 500 long term. But I'm sure it will just continue to increase their share price long term. Right, then earlier we had a couple of other companies that have been added. CrowdStrike Holdings, a cybersecurity company many people are aware with. Then we have GoDaddy, which I was quite surprised. I remember GoDaddy from buying websites back in the day, but obviously they seem to be doing well and probably added more services. And yeah, long term, the results speak for themselves. 1 year up 116%. So really quite tremendous results over there. Year to date, 51%. And again, you can see they have been added in around June. And since then, the share price continued to rise. So once again, it usually puts fuel into the fire to continue the appreciation of the share price if a stock has been added to the S&P. And then a couple of other companies I'm personally not too familiar with, but interestingly enough, when you look at the sectors, majority of them are IT companies, right? And that's the beauty of it. Obviously, we know that going forward, IT and tech sector will be strong sectors to bet on, right? And I personally do as well. Would I put all my money in IT and tech? You could do that if you wanted, for example, more tech exposure, investing into the NASDAQ 100. But for me, I still want to be diversified more across different sectors. And here, you can see I don't only have tech, but I still have some financials, some utilities, industrials, healthcare. So this is more diversified. But it also shows that there is a heavy focus on tech and IT. And again, I like the fact that I get that tech exposure without having to do anything just by investing in the S&P. Those companies doing well, which seems to be tech at the moment, will be included. But who knows what will happen 20, 30 years from now? Maybe it's biotech companies or something else. Who knows, right? But I will be benefiting from those companies being included in the S&P long term without really having to lift a finger. But as I mentioned, for every door that opens, another one closes. Let's have a look at all the companies that didn't make the cut anymore and had to leave the S&P 500. Right, and here we have them. And the latest one to leave, once again, have been 3 companies. You can see the same date that we had 3 new additions, 3 had to leave. In this case, it was American Airlines, Etsy, and Bio-Rad Laboratories. Now, I'm only familiar with the first 2. Interesting to see that such a major airline like American Airlines, which is quite well known, I would say, actually is not anymore in the S&P 500. That just shows you also how strong those other 500 companies are if such a big airline had to actually leave. And well, a quick look at their performance. You can see over here for the 1 year performance, actually they lost in share price, down 2.5%. Year to date, even down minus 13%. So really, the stock price has been hemorrhaging. And even crazier, I just saw over here, the short interest is currently 14.5%. That's absolutely crazy. It basically means almost 15% of shareholders are betting against the stock, meaning they make money when the share price depreciates in value. So a lot of people are betting against the stock, and that's really not good because they will basically manufacture some stories, negative press, to have the stock price go down even further, and that way they make their money. And yeah, that's extremely high number. To be honest, I haven't seen many companies with such a high short interest. I remember Tesla back in the day had like 3-4%, which for me was quite high. That is absolutely crazy. But obviously, once again, contrary to the ones that were included, if you no longer include it and actually left it, then that momentum is against you, right? Because now people think, well, the stock just left the S&P, there will be less money pumped into it. So people look at it even more critically. Well, that directly impacts the price, as we see. Similar story for Etsy. I used to use this website back in the days, but honestly, yeah, I think it really lost its appeal and they have so much competition now. So they're really in a tough spot. You can see the 1 year performance down minus 20%, year to date down 37%, absolutely mind boggling. And once again, just confirms, they were already in a downward trend trajectory over a 5-year period. But then obviously, having kicked out of the S&P, that further fuels the downward spiral. And similar story for the short interest, also 13.7% short interest. That's huge. So many people betting against it and hoping for the stock to further depreciate in price, which is really not helping them. And well, then we have a few more other companies. Once again, I'm not familiar with most of them that have left over here. Now, I'm not saying that you can't come back, right? I think there have been stock companies that were out of it and came back. That's not impossible. It's not that you blacklisted and can never come back into the S&P 500. But usually once you're out, it will take quite a while to get back. And we'll look at it in a second. What are the qualifications to get into it in the first place? But as I said, there's also the psychological reasons behind it, because once the stock is out, people lose trust. There's less money being pumped into it through the S&P 500 ETF. So naturally, the stock price has to recede in price for a while at least. Eventually, later on, it might bounce back through new initiatives, what have you, or some positive momentum, company management changes, what have you. So it can come back, but it will definitely take a while. So usually what you see, obviously, as we saw just now, a lot of people then use that momentum to bet against the company to make money when it further drops, until eventually maybe it stabilizes and then potentially can come back in price again, and then will be included in the S&P potentially. Right, but let's have a look at what are actually the requirements for a company to be included into the S&P 500. Now, here you see the latest one as of August 2024. You'll see in a second, those are also dynamic. They keep on being updated. Especially one line is very important, the overall valuation of a company. That's very dynamic and changes, from time to time, but a lot of them are actually fixed and stay for a while. The first one, of course, is very clear. It has to be a US-based company. So obviously a German company would not be able to be listed in the S&P 500. And I think it makes sense, right? You want to be investing in the US market, or at least know that you invest in the US market and benefit from that. If you want global exposure, you can find global ETFs. That's totally fine. If you don't want to only concentrate in the US, but if you believe in the US long term, then definitely want to make sure that you only get US companies by investing into the S&P. Then, of course, that's pretty self-explanatory that the company satisfies periodic reporting obligation of the SEC, which is the overseeing committee of the stock exchanges. And of course, those companies, they need to be listed in one of the major US stock exchanges like New York Stock Exchange, NASDAQ, or for example, the Chicago Stock Exchange. And then this is very important. They must have a market capitalization of $18 billion or more. And as I said, that's dynamic, right? In the past, that was lower. Now, as companies gain in valuation over time, that number is being adjusted upwards in most cases, unless we have a recession and all of them go down. So that's a bit of a dynamic number. Right now, it's 18 billion. But yeah, basically, the market capitalization, which is the number of shares a company has times the share price, needs to have a total value of 18 billion or more to be included. If we go back, for example, to one of the companies that was recently dropped, which was Etsy, right? You see the market capitalization now only 5.8 billion. So they're far below where they should be in order to be included. So that's a red flag, and probably one of the reasons why they were not anymore included, because the overvaluation of the company was just not high enough to qualify to stay in there. Now, going back to Palantir, a company that was recently added, if I go into the market cap over here, it's now almost 100 billion. So significantly higher than the minimum threshold of 18 billion. So once again, that's probably has been one of the reasons why they did qualify, right? As soon as you hit that, I believe you have to keep it for a while, because sometimes, you might just be around 18 billion. So I think there's a cutoff period for how long you have to be over that volume. But yeah, that's very clearly that they easily met that requirement. Another requirement is for the stock or company to trade a minimum of 250,000 shares in each of the 6 months prior to being evaluated in the index inclusion. So they have to have a bit of trading going on, right? Because some companies, they may not be traded much, right? So in this case, they don't seem to be too popular, and therefore it should not be listed in the S&P 500. Obviously, this can easily be overcome by, for example, having a stock split where you reduce the share price, let's say divided by 10, and then issue therefore 10 times more shares. So definitely you have more shares in circulation. So I think that's quite easily for a company to achieve that if they really wanted to, but it's not the only one. You have to meet all of them, right? And the last point for a company to pass is that the most recent quarter's GAAP earnings, as well as the sum of the previous 4 quarters of GAAP earnings, have to be positive, meaning they're profitable. Now, having said that, I was actually quite interested when I read this, because I remember that Tesla was already in the S&P 500, even though they were not really profitable for quite a while until recently. However, there's also some exception to the rule, saying that if a company has an extremely high valuation and is very much traded, as Tesla has been in the past, there will be certain exemptions for some of those points. And that's why obviously Tesla was included in the S&P 500 much earlier, even though they were not profitable at the time. And I think that's good, right? Because some companies, you really invest into future prospect, and they may not be profitable for a while. Still, I think they offer great investment opportunities for people to invest their money in. So I think it's nice to have it here, but I'm also happy to see that they make exemptions here and there if a company is really extremely popular and has a high valuation already. Well, there you have it. I hope you found it insightful and learned something new. For me, it's quite interesting to see and reassuring once again as an S&P 500 investor that the companies I invest in, they're very much dynamic. They basically auto-clean themselves, that you only have the top tier in there. And even now, with the trend going towards more and more tech and IT companies, I'm really happy about this because I see this in the future doing well, right? Better than consumer staples, for example, right? Like Coca-Cola and some other companies, which are great companies, but I don't think they're gonna rewrite the future going forward. Better to bet on some tech companies. While at the same time, I wouldn't want to put all my money instead of the S&P in, for example, the Nasdaq 100. While it can potentially provide superior returns for a couple of years, again, I'm a long-term investor. I don't know what the Nasdaq is going to do in 20, 30 years, but at the same time, looking at the S&P, I really bet on the country and overall economy. And in my eyes, it looks very promising and I don't have to do anything. For me, that's really truly passive investing on autopilot. I set it and forget it. I don't have to worry about anything and just wait for my dividends to come in and as well as my capital to appreciate over time, which so far has been doing really well. If you enjoyed the video, please give it a like. It helps it to be seen by more people. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.